I started at Hilliard Lyons right out of graduate school on July 6th of 1981 with Hilliard Lyons. And so I worked in the syndicate arena for a bit, and that business changed. I actually then started to trade corporate bonds and ultimately became head of all of taxable fixed income. So trading, sales, and underwriting of taxable fixed income. In 1994, I was named head of our private client business, not necessarily a natural transition from fixed income trading to running the private client business, all of the client-facing associates in our branch network, but I had built really good relationships with the organization and throughout the sales side of the business, so they all knew me and had worked with me in the fixed income capacity, and so moving to this other was really not a difficult transition for me because I knew everybody, understood them, and again had strong relationships. From there, I got a CFA along the way, ultimately became president of our trust company for a couple of years, and then became president of Hilliard Lyons, and then became CEO of Hilliard Lyons in 2004. Of course, we were owned by PNC Bank at that particular point in time, and we may talk a little bit about that. And then ultimately, we acquired Hilliard Lyons back from PNC with the help of a third party. We may talk about that as well. And then sold Hilliard Lyons to R.W. Baird out of Milwaukee and closed on that transaction on April 1st of 2019. So we're rapidly approaching our fourth year of that relationship. You know, it's interesting because I had an undergraduate degree, liberal arts degree from DePaul University in economics. And quite frankly, I wasn't sure what I wanted to pursue as I was getting out of college. So I opted to go ahead and go to graduate school. And it was really the best decision I could make because that extra 2 years with a focus on finance as I got my MBA really opened the door to finding the investment business. And I'm a big believer that if you find something you love and enjoy doing, you'll never work another day in your life. So I feel blessed to have found it and found Hilliard Lyons. So. Hilliard Lyons has an interesting history that dates all the way back to 1854. In fact, prior to 1965, there were two firms, J.J.B. Hilliard & Son, W.L. Lyons & Company. They merged in 65, operated as a partnership until 1972, at which point it became a C Corp, all employee-owned. And we traded the stock internally at book value. And so you got your annual allocation. And it was a great way for ownership, and I'll connect that with where we are currently with Baird in a little bit. So operated for 26 years from 1972 to 1998. And at the end of the 90s, late 90s, there was some legislation called Glass-Steagall that went away, and that allowed banks to get into the investment business and derive a higher percentage of their revenue from that type of activity. So where there was this wave of transactions that we saw across the country with larger banks acquiring regional broker-dealers, or what were considered regional broker-dealers, like Hilliard Lyons, like McDonald and Company, like Piper Jaffray, and I can go around, Wheat First Securities, and so on. So there were a whole series of firms like ours that were all part of this acquisition wave that occurred at the end of the 90s, and it was kind of the perfect storm where you had Glass-Steagall going away, you had banks coming to the table with high-priced currency in the form of their stock prices, and you had concentrated ownership in the hands of older shareholders within organizations like Hilliard and the others that I referenced. So there was a motivation to potentially sell at a higher valuation than what they were required to do in selling back to the company at book value as we recycled stock. So again, it was kind of the perfect storm, as I indicated. So we opted to, at the urging of shareholders, opted to seek a partner who would allow us to maintain as much of what we had enjoyed as an independent firm. And we sought out PNC and obviously did a transaction with PNC and were owned by PNC, beginning with the closing date of December 1st of 1998. And PNC, in selecting them, they allowed us to keep our headquarters in Louisville, allowed us to maintain our brand, have the sort of the feeling of independence that we had enjoyed, but also provide some services and become the platform within the PNC organization. So again, that was from 1998 forward. Of course, we then dealt with the tech bubble bursting in 2000, 9/11 in 2001. So the early days, while it was pretty much smooth sailing, we had some hiccups with a couple of those things occurring. So as time progressed, like I said, I became CEO in 2004. I think the banks realized that there weren't quite the synergies that they'd hoped for in acquiring investment firms, this one-stop shopping and all of the things that would come along with that, the hoped-for synergies. So in 2007, I got the call to go to Pittsburgh, PNC based in Pittsburgh, and on July 24th, and that's when they informed me of their intention to sell Hilliard Lyons, that we were no longer strategic. They'd acquired Mercantile Bank in Baltimore and Briggs National Bank in Washington, D.C. So they were shifting their focus around their retail banking franchise and really wanted to build their investment business around that. So Hilliard was no longer strategic, and we should feel blessed that PNC didn't try to make us something that we weren't intended to be. And so they put us up for sale, retained a New York investment banking firm to handle the transaction, and wanted to sell it for cash. So they wanted no financing contingencies when they sold Hilliard Lyons. They wanted somebody who could write the check. And so that limited the purchasing firm universe, if you will, to the very large Wall Street firms. And so we had a list of large Wall Street firms that were interested. We went through the due diligence process as they took a look at Hilliard Lyons confidentially. And then we were able to also introduce another party into the mix. And that was Houchins Industries in Bowling Green, Kentucky. And we were very fortunate. Again, our timing was interesting in that Houchins had sold a generic tobacco company. Houchins is the nation's largest ESOP, all employee-owned company with ownership interests in 28 to 30 different businesses, and they had sold Commonwealth brands for $1.5 billion. And so we knew they had the cash position to do this, and as an ESOP, they needed to reinvest in businesses, not investments, businesses, in order to maintain the tax preference that they had as an ESOP. So they were an interesting partner, I should say. We got them introduced into the mix. They signed a confidentiality agreement, so they became yet another participant. And of course, they were aligned with management. And our pledge to Houchins is that we would raise capital from our employees to share ownership with Houchins. So we announced the process unfolded, and actually we came in second when all the bids were submitted. So there was a better bidder than the Hilliard-Houchins combination, but that bidder realized that they were beating out the management-led alternative and didn't like the sort of dynamics of that. We're concerned that employees would view them as coming in wearing black hats, beating out management. So that firm walked away from the transaction, and that brought it back to us. And so we were able to announce it on November 15th of 2007 with the idea of closing at the end of March of 2008. Because of Houchins' ESOP status, they wanted to have majority ownership because they didn't want to take, for valuation purposes and ESOP ownership purposes, they did not want to take a minority ownership haircut in terms of the valuation. So they maintained throughout that they wanted to be the majority shareholder, but they also were not engaged in this business in any capacity. So they really wanted strong management. They wanted the management to be there and wanted the management to run the company. So it was a really a great way to do it from our standpoint. So again, we announced it on November 15th of 2007 with the idea of closing at the end of March of 2008. And about 6 weeks prior to that closing date, that's when we embarked on an internal private placement targeting our accredited investors, those who fit the profile to be able to take the risk of investing in a company like this. We set it up as an LLC to make it a flow-through organization to avoid double taxation. So it had partnership characteristics, but obviously LLC is limited liability corporation, so we were able to limit the liabilities that went with it. So in that 6-week period prior to closing, we raised just over $100 million from our employees, which was really a remarkable thing, made even more remarkable by the fact that when we actually closed, the week that we signed our subscription agreements to close on the transaction, that was the week that the financial crisis started to show up. Bear Stearns imploded that week, and so there were starting to be a number of cracks in the financial system and all that was happening. So our timing was really interesting to say the least. So I think we would have raised more than the $102 million that we actually raised if not for the turmoil that was starting to enter the marketplace. So we close on our, get our company back, and then the market proceeds to, steadily march lower. The credit markets freeze, and market conditions became very difficult. Obviously, we didn't bottom out until the early spring of 2009. So really, our first full year of operation was, as back as a quote independent company, was in a pretty turbulent period. And I would say the silver lining to that is that it really forced us, it was a forced march to get our arms around our cost structure, our priorities, and kind of get comfortable as an independent company again, and really become lean as part of the process. So we emerged from that and did so in reasonably good shape and fashion. Along the way, as I shared, we had our equity, we had Houchin's equity. We had some senior debt, about $55 million of senior debt, and about $75 million of subordinated debt at 10% interest as part of our capital structure when we started this. So it was expensive debt to have given the circumstances that we were embarking on. But again, we worked our way through that, and I think came out the other side in good shape. The other thing that we had to bear in mind was the fact that that $100 million that we raised from our employees, in many cases, was borrowed money as well. So they didn't have $100 million sitting around to invest in the company. They had to go borrow it. So we had to be mindful of our really effective leverage ratio, not only the leverage that we had on our balance sheet, but also that of our individual investors. So after quarterly earnings, we would make distributions based on quarterly earnings and the success to not make distributions from the company to also help our investors really with their own personal debt service. So we had a lot of demands on being in good shape financially to be able to perform, and everything we embarked on, new initiatives, things that we did, we had to make sure we're going to be pretty accretive to earnings pretty quickly in order to make sure that we didn't, we weren't unable to make the distributions that we needed to make to investors. So from 2008 to 2017, 18, we were operating, reasonably well. We had outsourced our clearing business in 2017 with the goal of essentially trading our clearing for an upgrade in technology. That was one of the things that we started to experience, is the potential divergence of interests with Houchins. They loved the distributions and loved the fact that we were making those to them. But on the other hand, it didn't necessarily give us the investment capital to invest in the business, which is why we really outsourced our clearing business, the processing, securities processing, in the quest to get better technology, which we did. And of course, anytime you make a technology transition of that nature, it's always creates some hiccups, some consternation and frustration, but we, again, worked our way through it. But that issue of having enough capital to continue to invest in the business was one that was important, and Houchins recognized that and recognized that our interests were starting to diverge. So in August of 2018, approached Houchins about moving on. We appreciated what they'd done because they had definitely kept us from being consumed by a large Wall Street firm that would have eliminated everything we had in Louisville, taken all of our home office, back office jobs out of the equation. All they really would have wanted is our distribution. So we were incredibly appreciative to Houchins, just as we were to PNC, for keeping us intact as they did along the way. We had a strong relationship with R.W. Baird, knew their chairman and CEO and leadership at Baird very well. We had been peer firms for many, many years, had shared best practices, confided in one another. We had a hands-off recruiting relationship, and they were a natural fit for us when we talk about firms where we could partner, again, create more scale that allowed for investing in the business and technology and all the things that the business needed. Plus, we had a really complementary business model to theirs. We had a trust company, they didn't. They had 90 private wealth offices, we had 70. That's a total of 160. We only overlapped in 10 markets, so our footprints went together extremely well. They've got a global investment banking business. They've got an asset management business. They've got a private equity business. And again, that was something that we gained access to. So when you looked at the two companies on paper and put them together, it was the perfect fit. From a Baird perspective, they got an awful lot of what they wanted and very little of what they didn't. So it was a very efficient transaction. At the end of the day, we kept 87% of our employees. Of course, you keep all of your distribution, but we kept a fairly high percentage of our home office employees, like entire trust company, our public finance team, our investment banking group, which has become Business Owner Solutions within the Baird organization. So it was a really, really good fit from a business model perspective and the synergies that went along with that. But what makes any transaction of this type go is the compatibility of the cultures, the people side, and that's what we had a pretty good idea about because we'd known each other so well for so long. In fact, you could make the case that Baird had about 20 years of due diligence on us because of the fact that we knew each other so well. We participated in the same industry roundtables, shared our data confidentially with one another, so when it came to valuation of Hilliard Lyons, they could quickly arrive at a fair price and a fair number, which had to be fair from a Houchins standpoint because they're an ESOP and had a responsibility to ESOP shareholders. So we used an independent third party, JP Morgan, to do the actual fairness opinion as we put the transaction together and had it valued and determined for fairness. So it went about as smooth as it could possibly go. We announced it on the Monday after Thanksgiving of 2018, and as I indicated in my opening comments, or early in my comments, we closed on April 1st of 2019. So we're rapidly approaching our fourth year as part of the Baird organization, and it's been a really wonderful fit in every respect. Louisville is headquarters too for Baird. In fact, we'll be hosting the annual meeting here in a few months, in the third week of May, and so it's exciting to have Hilliard Lyons land in a really good spot, and Baird is just the perfect fit for us, and it's proven to be a 1 and 1 equals something greater than 2 scenario in terms of how it's worked out. We were really at a crossroads. If Hilliard Lyons sells to one of those other large firms, then it's really game over for Louisville and game over for an awful lot of people. So I think when you look back on that and you say, gosh, you see what we did, the commitment to the organization, and I've said over the years to a number of people, if you only knew one thing about Hilliard Lyons, is that we could raise $100 million from our employees and do it right in front of the financial crisis when things were starting to get a little iffy. No one would have predicted where we were going, where we probably couldn't have done it. But the fact that we were able to pull that off, and we live in a very, very competitive business for talent. So our talent is recruited all the time. And so, we had some of our top talent being recruited by others. And rather than, get a upfront bonus to go someplace, they stayed and wrote us a check to stay and be part of it, which was really a phenomenal thing. So I think you can share that with people, or you share that story with people, and a lot of them would say, no, that's impossible to do. That would have been impossible. But we all stuck together, and again, it's a reflection of a great culture that people really, really cared about. I don't think I would do anything differently. So as I shared, I feel incredibly blessed to have found the industry, to have found the firm, and found a firm that just fit me culturally, where I could just be myself, and it just fit and worked. And so again, feel blessed to have had the opportunities along the way. And I guess as you talk to younger people, as I shared earlier, you want to find something you really enjoy doing, because you won't work another day in your life, and you'll be good at it because you do like it. And so, I also like to say that it can be a job or a career, or it can be a third level, and that's when it becomes your identity. And that's where I've gotten, where what I do has become my identity. It's who I am. And again, I feel incredibly blessed to have reached that point where you feel that way about what you do and the people you work with, and all that you can accomplish together. Well, it depends, I think, probably on what kind of CEO you are too, to some degree. I'm sort of the servant leader. I like the flat organizational chart. I never like to say somebody works for me. I say we work together. My associate works with me. So like the flat organizational chart, like the easy communication, the servant leadership model. But even with that said, and as much as you try to consensus build, and as much as you try to have everybody rowing the boat in the same direction, there are times you have to make tough decisions, and tough decisions that can leave you feeling kind of lonely at times. So I think one thing that people might not fully understand and appreciate is that as a CEO, you can be a little lonely at times when you have to make those hard decisions. And I got to tell you, when right after we bought Hilliard Lyons back from PNC, and you go into the throes of the financial crisis, I felt a little lonely at times, as we you didn't know how that was all going to play out. They don't ring a bell to tell you that the market has bottomed out, and so. There were prognosticators out there who were cutting it in half yet again when we reached that bottom. So, that uncertainty leaves you feeling responsible, lonely, and again, this sense of stewardship that I've had, this sense of loyalty to the organization. You work your way through it, but again, it was a challenging time for sure. It's important to always be yourself. So when I got the job as CEO of Hilliard Lyons, of course PNC owned us at the time, so I interviewed with them, and they said, we want you just to be you. We hired you to be you. And so I think that's the thing that you always want to be, is authentic, be who you are, be willing to admit mistakes when you make them. Those around you will appreciate you and respect you for it. You can't have all the answers. I try to keep sort of a really even keel approach to things. Obviously, your demeanor does set the tone for the organization. So as we went through the financial crisis, had to stay upbeat and positive. But your demeanor is really important, and it's important to stay sort of even keel. Those would be some sort of leadership observations. I'm also sort of a big believer in sort of emotion, the EQ, and just understanding people. And I tell you, one thing I think I've earned in 42 years is an honorary doctorate degree in psychology as a result of dealing with so many situations and so many type A people in what is really a competitive business. I mean, performance is how we're measured. And so you really learn how people operate, and that would be the insight. I think I've developed an understanding of people over the years, and how to work with people, how to be able to put myself in their shoes and look at it through their lens, to listen, A lot of leaders want to tell you what they know and don't really care what somebody else has to say. It's so important to listen. It's so important for those who you're working with to trust you and understand that your intentions, that the decisions you're making are sincere. And so authenticity is so critical. Well, I think one of the things you want to pursue are internships. So that's something outside of the classroom. And so if you're fortunate enough to develop a particular interest while you're in college, obviously you want to take classes that fit that, whether it's investing, finance, marketing, whatever the case may be. But internships outside of the classroom. And the other thing I think was so helpful, and honestly, this was some advice that I got from a gentleman who was with Goldman Sachs when he was at the faculty club at Ohio State when I was in business school there. He said, talk to anybody who will talk to you about this. And so I took it upon myself to make visits to firms in Chicago, New York, got around and really essentially talked to anybody who would talk to me. And every conversation I had enabled me to put another piece in that puzzle, because it is a complicated puzzle when you look at the investment world, the investment business, in all the different ways in which you can participate in it. But it really gave me sort of an informed position, or a much better informed position, as I then decided where and how to pursue a career. So talk to anybody who will talk to you. It's interesting that I get students reaching out to me all the time, just wanting to talk. So somebody else has given that advice out there as well, but I think it is really good advice. And the thing I'm finding is that a lot of these students are pretty well versed these days. So they're probably ahead of where we were 40 years ago in terms of understanding what's out there and what their interests are. And so, but again, talk to anybody who will talk to you. It goes back to the people skills, interpersonal skills. And so, that's something you can learn in theory in business school or college, but until you actually work with people and understand different types of personalities and what motivates people, and again, to be that EQ, be self-aware of who you are, but also be aware of who they are and try to put yourself in their shoes. That's the one thing that I think I've learned a lot of over the years. And when you have conflicts or challenges or things, it's so important to kind of keep whatever the issue is at the forefront and don't allow emotions to enter the conversation to the extent you can keep them out, because then it becomes a war of wills. If you get really emotional involvement in it, or people who are really emotional, then they, sometimes what you're trying to solve becomes secondary to who's going to win. And so you want to keep whatever the issue is at the forefront. And that's where the even-tempered demeanor and approach to it, I think, has helped me along the way. The other thing I've never hesitated to do is, with a difficult situation, tell somebody, I want to go sleep on this. I really want to step back from it and think about it for a while. And frequently I find the decision I have after that is much better than the one I would have made if I'd made it on the spot, or the recommendation I would have made on the spot. So never hesitate to step back and think about something and give it your best answer, as opposed to an immediate quick one. So, I've, of course, as I shared, when you make mistakes, and you're going to make them. It's just, in fact, you can argue that if you're not making them, you're probably not taking enough risk. You're probably not doing enough. You're not pushing the envelope enough. That said, you want to take measured risks, so thoughtful risk. But when you make mistakes, I think it's really important to learn from them, so that you don't make them again. But then again, admit it and move on and put it behind you, because there's that old saying in sports: don't let that team beat you twice. It's where you have the bad game and you let it linger on, and it affects how you do things going forward. So when you make a mistake, learn from it, own it, but then put it behind you and move on. And I remember early in my Hilliard career, this was probably 1982, so I'd been there a year and a half or so, and we had a pretty good sized trading error, relatively speaking. It wouldn't be that huge these days, but in those days. And it was just based on market conditions that switched on us. And so I remember going up to meet with the then CEO, who happened to be Henning Hilliard, the last Hilliard to be involved, and kind of walked through what had happened, the loss that we had taken. And I remember his response being, "Did you learn something?" And I said, "I did." And his answer was, "Get back to work." So it was also a great leadership lesson for me at the time too, in terms of, he knew I didn't want to make the mistake. It happened, but went up and talked about it, talked it through. I did learn from it, never made that mistake again. I've made others, like I said, but not that one. So it was also a good leadership lesson for me as well, in terms of how to treat people, in terms of understanding that mistakes are going to get made. And that's the one thing you want in our business. When a mistake is made, you want somebody to own it quickly, because you hear a lot of stories about mistakes being made on Wall Street where a ticket goes in the drawer and somebody's hoping that the market's going to bail them out or circumstances are going to change. And then what is a mistake becomes a really big one. And so it's important for people to feel open, that they can come have that conversation, that difficult conversation, admit the mistake, talk about the challenge, whatever the issue is. And so that's the other reason you want to maintain that approachable, even-tempered demeanor, so that people aren't feeling threatened that you're going to, take them apart if they come in and tell you some bad news. And that's the other thing with just leadership in general, is you want to get the right story. You don't want people to tell you what they think you want to hear, and how you project yourself and how your demeanor is perceived is part of that equation as well. So it's really important to be approachable and get people to tell you what they really think, not what they think you want to hear. I guess what has made Louisville feel like home to me forever, and the reason I moved away at 12 years old and felt compelled to come back at age 25, is the culture here. I think it's a great culture of caring. There's something about it, and I find it in the philanthropic community that there's a collaborative spirit here. And so I just think it's a community that has an awful lot to offer. I do think in some respects it's a well-kept secret. There's so much more that we can do, and I think there's an opportunity for that to happen in a very thoughtful and measured sort of way. But it's just a great place to live and work and do business. So I just think it's a special place. I've been very involved philanthropically, and I've felt blessed in what I've done, and felt compelled to give back. And so I enjoy giving back and being part of the community in that way as well. And it's been very rewarding, because it's a community that definitely appreciates that, and like I said, collaborates well. I would just be thorough and thoughtful in doing your homework about what you do want to pursue, and go into it with the idea that maybe it could be your home for life. There are certain jobs that that's not going to be the case. But in my case, I took this job at Hilliard thinking this could be my life, and it's turned out to be just that. And it's really rewarding when that can be the case. So that's the thing I would encourage everybody to do, is find something you really enjoy doing, because it makes it so much more fun and rewarding and fulfilling when you can find that kind of passion